Good evening, everyone, and welcome to this session today on audit to FP&A. We get a lot of inquiries. Asif and I both get a lot of inquiries on LinkedIn as to how do I move from an audit function or an accounting function to FP&A, how FP&A is different, why is it gaining so much of prominence today, why FP&A is becoming a trusted soldier in a CFO's office. All of those questions we will try and address and understand a little bit about FP&A. By the end of this webinar, our goal is also to give you a quick taste of how is it like to work in FP&A and how is it going to be different from your audit and accounting role. Okay, so that's what we'll be trying and aiming for today. So first of all, thank you for your trust. You've taken out your valuable 60 to 90 minutes to spend time with us here today to learn something new. So thank you for your trust. Pat yourselves on the back for taking action. You see, many people want to work into FP&A, but they are not ready to put in the required hard work, right? So those who are taking serious action, that is when you are able to see certain results. So pat yourselves on the back for taking that action today. Again, my request to all of you would be to get rid of all the distractions over the next 45 to 60 minutes. We'll try and cover a lot of ground in understanding what is FP&A. We'll show you some examples. We'll give you a taste of how is it like to work in FP&A so that you are able to have a clear understanding of how FP&A role is different from audit and what is the kind of mindset shift that you need to adopt to work in FP&A. A little bit about us before we begin with. My name is Dhaval Parvatikar. I'm a qualified chartered accountant. I've also completed my 1-year general management program from IIM Ahmedabad. Over the last 16 years, I've served as a CFO and a finance leader in India and in the Middle East across various multinationals, across different industries ranging from oil and gas, commodity trading, advertising and public relations, and software. I'm now the co-founder and lead faculty at FP&A Professionals Institute. Over the last 5 years, I've been an active trainer and an online mentor, and I've trained more than 5,000 professionals on various topics like FP&A, finance business partnering, data storytelling, CFO career coaching, and much more. I've also had the privilege over the last 12 to 18 months to build a strong and engaging community of 200 plus CFOs in the Middle East. I've also hosted 10 plus events. Somewhere I've gone in as a host, as a moderator, as a panelist, as a keynote speaker. I've been consistently in the CFO scene over the last 12 to 18 months and got to learn a lot of it, got to talk to a lot of CFOs and understand what are their expectations in terms of building a solid FP&A team. So that's where, what we have been working on in the last 12 to 18 months. I'm extremely happy to have joined by my co-founder, Asif Masani. Asif, a quick introduction from your end.
Yeah, thank you so much, Aval. Thank you for having me, and always pleasure to do this Audit FP&A webinar with you. So quickly about me, I've been working in finance FP&A for over 15 years now. I started working in audit back in 2010 and moved into FP&A in 2013. So I've spent more than a decade in FP&A. Started as a FP&A analyst at Citibank, and then my most recent role was the FP&A lead for India and APAC at Coursera. And in 2020 to end 2023 beginning, we started FP&A Professionals Institute, and we have been training and coaching FP&A, I would say, people who want to move into FP&A coming from different backgrounds in finance, be it audit, be it tax, be it accounting, and that is what we have been doing for the last 3 years now. Over the last, I would say, 3 years, we have got incredible opportunities to meet top FP&A experts around the globe, right from North America to Europe to Middle East. And we try our best to bring all those expertise, not just my and Dhaval's expertise, but experience and expertise of top FP&A mentors and coaches through our content, be it books, podcasts, certifications, courses, and we try to bring all of that to you. So that has been our journey from 2018. Dhaval started his first FP&A course, which was in Foundations on Udemy. And over the years, we've been continuously training and coaching students in FP&A. So we've trained more than 5,000 students across all of these courses that you see on the screen. So with that, I'll give it back to Dhaval and we'll get started with the today's webinar topic.
Thank you, Asif. Always a pleasure to partner with you. So what is this training about? What are we going to cover in the next 60 minutes or so? Let me give you a quick overview of that. So what we are going to talk about is a classic transition from an accounting or a consulting firm to a finance function of manufacturing, trading, or a services company, right? So we are not talking about moving into finance like something like investment banking or advisory or something like that. A classic corporate finance or an FP&A role in a manufacturing, trading, or a services company. So that's what we'll be focusing on today. So what will we cover? We'll try and understand the different kind of roles in the finance function, okay, and where you fit into the organization structure, where it fits into the organization structure, and how finance and FP&A role is going to be different from audit roles. We'll try and understand with some scenarios, some examples as well. And then finally, what can you do to prepare for
YOLO.
this shift, right? How do you make those realignments in your career so that you can shift from an audit function to an FP&A function? And of course, we'll also touch upon some certifications and courses in FP&A, which will help you prepare for FP&A roles. Okay. So all in all, a value packed 60 minutes, right? So get rid of all the distractions and, look and give us your complete attention. Okay. So here are some of the success stories. First of all, the question that needs to be answered is it possible? Can I move from audit role to FP&A? Can I move from my accounting, tax, whatever role to FP&A? It is absolutely possible. And here are some success stories from my own acquaintances. One of my friends who started as a payroll manager in Pune, he's head of finance of a tech company in the US, a $1 billion plus tech company in the US. I know somebody who's worked for 22 years in KPMG in a classic audit function. He then went on to become a group CFO of one of the largest banks in the Middle East. Okay. I know somebody whose journey started as a classic audit assistant at Ernst& Young. He is now the group CEO of an advertising company, a global advertising company, Japanese advertising company. And not the CFO, he's a group CEO of an advertising company, right? So all of these stories tell you that everything is possible, anything is possible, right? And even when you're transitioning from your accounting role to an FD role, there are a lot of things that you can use as your transferable skills. A lot of analysis skills are transferable. FP&A is also very much commonsensical in nature, where you can apply basic concepts and then master those things, master those analysis as well. And we look at some examples of how to do that. Okay. So yes, the moot point is it is possible. The transition is definitely possible. Just to give you a broad landscape of what kind of industries or where FP&A fits the bill, right? So here are your classic public accounting firms, your big fours, your classic accounting firms, right? And then here you might join into an advisory role or an implementation kind of a role or a CFO support services kind of a role. In the banks, you have again your classic roles, which are analyzing a lot of things about different kind of KPIs, banking and financial KPIs, and then supporting the teams. In financial institutions like private equity, investment banking, all of these things, you're still analyzing the performance of various departments, trying to understand which department is profitable, is the pricing correct? All of these things are here. And then in the classic corporates, your manufacturing, your services, businesses, you're trying to understand the different business units, different kind of verticals, different products, their profitability, their performance, their margins, their costs. All of these things are available in the corporates as well. So technically, FP&A is impacting any sector that you are working in, right? So everybody needs FP&A in some form or the other. In some companies, it is explicitly available as an FP&A department. In some companies, the finance manager role or a commercial finance manager kind of a role itself executes the FP&A function. Okay. Now, what are the different profiles available out there? If you can visualize a large company or a business house, right? There could be a number of different kind of finance and accounting roles, but all of them can be grouped into three broad buckets, right? One is your financial reporting or compliance bucket. Okay. The other one is your business finance, commercial finance or FP&A. And then there are other specialty finance function, which is handling only certain specific tasks. Okay. Your compliance bucket takes care of all the compliances and reporting, preparation of financial statements, consolidation, statutory audit, internal audit, SOX audit, different kind of regulatory reporting, tax returns, all of that comes under the compliance bucket. And then there is a commercial bucket or management reporting or management accounting bucket. Here we are talking about activities like budgeting, forecasting, different kind of analysis, profitability analysis, management commentaries, working capital management, capex, contracts, pricing, recharges. All of these things are coming under the commercial umbrella, which have nothing to do with your accounting standards or your accounting rule books. Okay. Then comes specialty finance functions, all those things which do not necessarily fit into bucket 1 and 2, like treasury, forex management in larger companies, mergers and acquisitions, fundraising, investment management, structured finance, which is all about analyzing the structure of the company and deciding whether how do I structure the company? Do I open my holding company in a tax haven, or do I structure my subsidiary in I don't know, Singapore or Netherlands or whatever? So all of these is structured finance. Strategy, in different elements of strategy, execution, formulation, right? Supply chain finance, you look at the entire supply chain and see how you can make your finances to your customers and vendors much more simpler and accessible so that they are ready to promote your products even better, right? So that's supply chain finance. Then there are different kind of project finance. Large companies typically require who operate project wise, they want a project finance as well. Then there are functional consultant roles, right? You could be a SAP functional consultant, you could be a Anaplan consultant, you could be any a BI tool consultant, right? So all of those things are also possible for you to look at and then take on those consulting roles as well. Now, no matter what company you work into, you will find some or the other variations of these three buckets. If the company is large, then your role will be very specific, which means you could be handling budgeting of one particular department, or you are taking care of only profitability analysis for your branch level profitability analysis in a bank, right? So you're handling some specific stuff if the company is large. But if the company is small and medium enterprise or small and medium sized, then chances are that you could be taking care of all of these things. You are the one who is preparing financial statements during statutory audit. You're also preparing the budgeting for the next financial year, right? So your role could be pretty mixed in that sense, pretty hybrid in that sense. That also is FP&A, right? So everything which is involving commercial aspects, which is involving things beyond accounting, that can actually fit the larger umbrella of FP&A. Okay. So what could be your role? So when you join a company, typically your role could be of four types. One, you're taking care of a regional setup. Your FP&A manager North, your FP&A manager APAC, your FP&A manager India, whatever. Right? So that could be a regional role, or it could be a business unit role. Right? Let's say, imagine a company like Johnson and Johnson, right? So Johnson and Johnson has baby powder, beauty products. It has eye care. So there are different kind of divisions within Johnson and Johnson. So you could be FP&A manager baby products, right? So you could be FP&A manager beauty, right? So those kind of things are where you're taking care of only the performance of your business unit. And then there are global shared services, right? A lot of European and American companies have set up their centers of excellence in low cost economies like India, Philippines, right? And here they're hiring thousands of finance and accounting professionals to cater to clientele or cater to internal stakeholders who are sitting across the globe. So you could be a FP&A analyst sitting in India and then supporting your different stakeholders in Europe and US. Okay. Or you could be a FP&A manager in the US trying to get things done from your team of FP&A analysts sitting in Mumbai. Okay. So that's the global shared services kind of a setup. And then there are project-based or client-based setup, right? So many companies, they want finance professionals to handle a certain cluster of clients, the finances for that particular client or finances for that particular project, especially if there are large clients or large projects, right? So that is where project or a client level FP&A role comes into play. Okay. Again, yeah, I think we already covered this. Yeah. So how your role is going to be different, right? So what is the mindset shift that you need to adopt to be successful in FP&A? Let's look at these. Let's look at this with some of the questions which will come to you in your FP&A role, and how do we answer these questions? Okay. So what is the Q1 revenue target for your department? A classic question from your business unit head or a department head, trying to understand the revenue targets for their department. How are they built? What do we need to do to achieve that revenue department? It can be answered from your budgeting document or your annual business plan document. How much have we set aside for LinkedIn marketing for the upcoming financial year? And what is the quarterly breakup? Again, a classic question from a marketing director, right? You have built your marketing budget, and let's say $500,000 is your marketing budget. And out of that $100,000 you have allocated for LinkedIn, right? But $100,000 will not be spent in January, right? So you'll have to phase it. You'll have to phase it accordingly. You'll have to give a quarterly breakup, right? You'll have to assess the KPIs and then allow the marketing director to spend that money, right? So that is answered from your marketing budget or a marketing budget document that you will be preparing. Out of the 50 headcount additions, how many are we planning to hire in Q2? Get a classic question from an HR director. You have decided that you want to hire 50 more people in the upcoming financial year, but what was the quarterly breakup? How do we decide when do we hire people? And that has to be in sync with the revenue as well. I can't let my people cost grow faster than my revenue. It has to be in sync, right? So we will look at different intervals. We look at our budgeting document, we look at our forecasting document and assess that, okay, in Q1, our performance was not as expected. So instead of 12 people, let us stop at hiring only 10 people. And maybe we'll realign it in Q2 as a forecast or realign in Q3 as a forecast, right? So these kind of partnering or these kind of answers will be given to the HR head. How much new business do we have to bring in Q4 to cover the shortfall in Q3? So classic question from a business unit head or a CEO. You did not meet your targets in Q3. So how can we plug this shortfall? Can we plug this shortfall with price increases? Can we plug this shortfall with getting more quantity? Do we have some margins to give up to get better discounts and acquire these customers or meet our revenue number? All of these kind of questions will be answered by looking at your budgeting and forecasting document. What is the impact on profit if we drop our prices by 8%? Again, a classic scenario planning question. And if you drop our prices, then what happens? If you increase your prices, then what happens? What is the best case, worst case, moderate scenario? All of these different kind of scenario planning you will have to provide to various business stakeholders in the company for them to take certain decisions. Now, I hope by looking at these some sample questions, you have got a fair idea that this is completely different from your accounting role. It has nothing to do with your IFRS or accounting standards or US GAAP or any of the accounting rule books that you have been following. This is purely commercial in nature. You need to have understanding of revenue, cost, margins, direct cost, indirect cost, variable cost, fixed cost. All of these things are important here to understand for you to monitor the performance of the business. Okay. So what do you need to do? You need to think beyond compliance, right? And it's all about supporting the business. To support the business better, you need to understand the performance of the business. And to understand the performance of the business, you need to change your conversations from accounting conversations to performance conversations. Accounting conversations revolve around accounting standards, withholding taxes, GST, financials, notes to accounts, disclosures, prior period items, depreciation method. All of these things are your compliance conversations, right? Whereas performance conversations revolve around revenue, gross margins, product profitability, client profitability, contracts, pricing, discounts, margin analysis, scenario planning. All of these things are your performance oriented conversations. So that is what we need to learn as a professional. Okay. So there's some background noise. If you can mute. Okay. Now, the second important thing for finance professionals will be that it's not going to be an isolated function. At regular intervals, you will be collecting inputs and updates from various departments in the company, various cross-functional teams in the company, and also providing a lot of reports and insights to these various stakeholders so that they can take decisions. They don't understand 10,000 lines of Excel sheets, right? So they can only interpret the numbers. So they expect insights from the finance team so that they can take prudent financial decisions. So that's where the team comes into play. Now, what are the key activities in FP&A? Now, no matter what kind of a company you go into, small, medium, large, these are the three core things that any team handles, right? Budgeting, forecasting, and under management reporting, you have your variance analysis and profitability analysis. Okay. So let's spend some time in understanding what are these components, and maybe I'll show you one or two examples as well, right? So budgeting is your annual business plan exercise, right? If I have to achieve X number of revenue next year, what would be my estimated revenue? What would my estimated cost for the next year look like? And what would be my operating profit for the next year look like? And this exercise is done before the start of the financial year. Typically, if 2026 is the financial year, most of the companies start the budgeting exercise from somewhere between July, August, and it ends in December. By December, the board approves the final budget and it gets uploaded in the system. And then comes forecasting. Forecasting is all about analyzing the ongoing performance of the business. Now, let's say we have completed 3 months of actuals, Jan to March of actuals. At the end of March, we will retest our assumptions on everything, on our revenue, different kind of costs and operating profits, and then build our estimated revenue, estimated costs, and estimated profits for the balance 9 months. So forecast is always actuals for the completed period and balance for the remaining period of the financial year. So that's why it's called, let's say, a 3+9 forecast. If I'm preparing it at the end of June, then it will be a 6+6 forecast, right? So 6 months of actuals and 6+6 months of forecast. So that is forecasting for you. And then comes management commentaries at the end of every month, at the end of every quarter, depending on who the stakeholder is. You will be publishing various kind of reports. In order to execute these reports, you will be carrying out two different types of analysis. One is your variance analysis, where you're doing different kind of comparisons: actual versus budget, actual versus forecast, current quarter versus previous quarter, current month versus previous month, current year to date versus previous year to date. All of these different kind of comparisons, and trying to understand what worked well, what did not go well, and trying to capture them as your management commentary. And then comes your profitability analysis. If I tell you that the company's profit is $100,000, the management is not happy with that $100,000. They always want to dissect it and see where is this profit coming from and how can we improve this profit better. That's why they want to go granular and understand client level profitability, branch level profitability, department level profitability, project level profitability. Depending on how your company is structured and how they are operating, you will have to do different kind of profitability analysis, get the gist out of it, and then put it in your management commentary and send it to the management, right? So these are the 4 core activities involved in FP&A function, no matter what kind of a company you go into, small, medium, or large. Okay. Now let's look at one quick case study, okay, to understand how does a company build a revenue budget. Okay, there are different components in revenue. Like I told you, the end outcome of the budget looks pretty much like a P&L statement. It has your revenue, it has different cost line items, and finally your operating profit. Okay, now how do I build that revenue budget line item? Let's look at it with a B2B revenue budget case study, right? So what is B2B revenue? B2B is business to business, a business that is catering to other businesses. It is charging other businesses for the services that it renders. Okay, so let's look at the B2B revenue case study with an example. I'm going to be a little bit quick, so please pay attention here. Even if you miss a couple of seconds, then you will miss the link. So in the interest of time, I'm going to be a little bit fast. I will build an end-to-end revenue budget for you for a company in front of you. And then if there are any questions, we can take them in the end as well. Okay. So let's look at the case study on your screen now. You're working in Infosys as a business finance manager, primarily looking at client contracts, business unit profitability, and business unit FP&A. Okay, so you're working for a business unit in Infosys. Infosys is a B2B software company providing software services to its various clients. The revenue generated by Infosys is largely split between retainer contracts and projects. Retainer is where you are actually billing a fixed sum of money, either on a time basis at an agreed rate, or a fixed monthly retainer, like $15,000 per month, $20,000 per month. That is a fixed retainer. Then it could be project-based billing, 3 months project, 6 months project, 2 years project, whatever might be the project, right? And there you have a milestone-based billing. If I complete 15% in 2 months, after that I will bill this. If I complete 30% of the work, I will bill this milestone, right? So that is project-based billing. You are required to work with the business lead and prepare revenue projections for 2024. Assume that you are at the end of 2023, somewhere in August, September 2023, and you now have to prepare projections, revenue budget for 2024. Senior management guidance is to aim for at least 12% revenue growth. The senior management has a certain ambition. They want to grow by 12% revenue in the next financial year, upcoming financial year. Okay. Can that be done? Let's see how that happens. Assume that we are now at the end of December 2023 or end of 2023 financial year, or in Q4 of 2023. Okay. So let's get started. Classic steps in the budgeting exercise. Once we decide to prepare the budget, we analyze historical data, we get our budget templates ready, and then we start our discussions with the business team to understand what kind of revenue projections can we expect in the upcoming financial year. Okay, so here I have my template. Here I have my, just give me a second. Yeah, here I have my template where I have my client list, whether they are a retainer or a project, what has been the revenue for 2023, last financial year, what is the retainer per month, all of that data is given here. And then here is my template to build the revenue budget for 2024, Jan to December. Yeah. And here are my discussion notes with the business team. So I discussed with the business lead, tried to understand every contract, every project. And then here are my notes. What we'll now do is we'll look at these notes and give effect to these notes and populate the numbers for 2024. Okay. Again, focus. Don't get distracted with anything else. This is going to be over in 15 minutes. This example is going to be over in 15 minutes. So focus here. Visa will renew its contract for 1 more year at the same rate. So Visa is paying us $1 million per month. I'm going to continue the same retainer fee till December 2024. Okay, let me just quickly hide this. Yeah, till December 2024. Okay, yeah. Now, the second point is Bank of America contract ends in June 24, and there is a strong possibility that the client may not renew. Okay. Now remember, where are we now? We are at the end of 2023. Okay. And Bank of America retainer is for $500,000 per month. They are not going to renew after June 24 is what the business head feels. They have not told us. Okay. But the business head assesses these relationships and he has a feeling that they will not renew after July 2024. And we will go by that. We will not consider any revenue after July 2024. Okay. IBM has agreed to renew its contract with an escalation of $100,000. So IBM is paying us $1.4 million. I'm going to escalate it by $100,000. So it will be $1.5 million and I'll continue it till the end of the financial year. Okay. ExxonMobil has decided to discontinue our services from 2024. Okay. What happened here? ExxonMobil was our largest client in 2023. Okay. We made $72 million from this client, $6 million of monthly retainer fee. Okay. But we lost this client. This client doesn't want to work with us anymore. Whatever might be the reason. In some large companies, they go for an RFP or a different kind of a vendor quotation every 3 months or every 3 years. Right. So maybe that 3-year relationship period has ended. Now they're going into an RFP, or maybe the relationship has gone sour, right? And they don't want to see our face anymore. Whatever might be the reason. We have lost ExxonMobil as our client. We've lost $6 million of retainer every month. Now, remember, software services is a people-based business. There are people working in ExxonMobil on the site. What do we do with them? Right now, let's not think about it. Right now, we are only looking at revenue budget. We'll first build the revenue budget and then see what can be done about the costs. Okay, let's go to the next point. Talks with Microsoft have fructified. Contract is under discussion. Likely commencement of retainer from 1st of March at $3.5 million. Now we are at the end of December 2023. Microsoft has awarded the contract to us. We have won the retainer. But typically in a services business, what happens is that it takes a lot of time for the legal team to finalize the contracts. Legal teams do a lot of back and forth, especially if it's a large scale service contract. And then it takes at least good 4 to 8 weeks for them to finalize the contract and sign on that dotted line. Okay. So in this case also, we are estimating that the $3.5 million per month retainer fee will start from 1st March onwards. Okay. We are relieved, right? So we lost one of our big clients and we won another big client. classic services business. You keep losing clients, you keep winning clients. Okay, let's go forward and let's see what happens next. L&T has asked for scope and fee reduction of 20% from April 24 onwards. So till April 24, the retainer fee is going to continue at $1.5 million. And from April onwards, there is a reduction of 20%. So 20% of $1.5 million is 300K. So the new retainer fee will be $1.2 million. That will extend till the end of the financial year. Okay. Ministry of Tourism are planning for a bigger project with roughly $4 million split equally in April and May. Okay. So Ministry of Tourism did a $1 million project last year. This time they want to do a $4 million project, and this will be split equally between April and May. So I'm going to say April and May. Now, this doesn't mean it will exactly start on April 1st. Okay, that is my assessment. I am in November 2023, December 2023. Okay, so as of now, it will start in April and it will get completed in May. Okay. Senior management aims to achieve an overall revenue growth of 12% over 2023. What was the 2023 revenue? $125.8 million. And what would be the 12% growth look like? It is $141 million roughly, right? But I just did all my discussion. I completed all my discussion with the business teams. Okay. And they are giving me a figure of $87.3 million. So what can be done here? Okay. You are the lead. Type your responses in the chat box. What can be done here? Management is saying $140 million, but I just did all the discussion with the business team. We are only coming to a count of $87.3 million. I don't know what the management is smoking. Yeah. What can be done? Come on. Type your responses in the chat box. Take 30 seconds to think. You are the FP lead. What will you do? Come on. Type your responses in the chat box. I'm waiting for some responses. Get into the shoes of FP lead. Okay. Somebody saying new leads. Okay. Praveen says we lose one client who pays high amount. I did not understand. So what are we going to do about it? More new business leads. Okay. Trying to hold existing customer. We are holding existing customer. We already saw that. We'll try to catch them again. No, ExxonMobil doesn't want to see your face. They have told you that if you come in a 5-kilometer radius of our company, we will shoot you. Price increase. No, the prices are already locked. Negotiate for increase in scope of work. Okay. See, here we are assuming that the status of existing clients is already taken care of. Okay. So some of you who typed new business or new leads, that answer is correct. Okay. Typically what happens in a services business is I don't have visibility of 100% of the revenue, where 100% of the revenue is going to come from in the next financial year. Okay. So I only have visibility for $87.3 million. Now, can we plug this gap to $141 million? Let's see. Okay. So all of those who said new business or new leads, now how do I capture it in the Excel sheet? Okay. So one way to do that is I'll say a new business line item. Okay. I'll say a new business line item. I'll put some dummy numbers here or I'll put some placeholder numbers here. Basis a certain scientific analysis, I'll put some numbers here. Okay. A more scientific way to tackle this case is I will say client 1. Okay. And this client will be a retainer fee. I might win a client from, let's say, April onwards at $3 million, and this will continue till the end of the year. Okay. I'm putting client 1 as a placeholder. This is not some random client. In a services business, at any given point in time, I'm pitching to at least 50, 60, 100 clients. Okay. I'm hoping one of them will get closed by April, right? So I'm putting in a placeholder. I'm not putting in a name, but I'm looking at my new business pipeline. I'm trying to assess what is the probability of winning a client and what would be the potential size of that client. Now, let's say, for example, I'm pitching for Tata Motors. Now, I know that Tata Motors is a big client. If Tata Motors comes, then I know what could be the possible size of that particular business. Okay. So basis that, I'm putting in a placeholder. Now, I'll put another placeholder for a retainer, let's say from June onwards at $2.5 million. Okay. Now, these are not some random numbers. These are pretty scientific. To win an average client of $3 million is not a big deal for me. I have serviced 3.5 million. I have serviced $6 million clients. I have serviced $1.5 million clients. I can definitely win a $3 million client. I can definitely win a $2.5 million client. In the whole financial year, can I just win 2 clients? There is such a big new business team sitting in my office. What are they doing? I hope they win 2 clients, right? Then we are still far away from the 12%. So what more can be done? Let me also put some projects as placeholders, right? If we can win one project with Ministry of Tourism, we can win more projects. Let me put $2 million every quarter as a placeholder. Now, this doesn't mean it will come only on the last day of every quarter. This means that we will win a $2 million business anytime in this quarter. Okay, basis the new business pitches that are going on in the market. Okay, I'm still short by, let's say 11.1%. So let me increase this by 1 month, and let me reduce this by 1,000. Okay. So I just increase the 1 month retainer fee, assuming the client 2 will come from May onwards. Yeah. And then these projects will be coming in every quarter, and the last project will be for $1 million. So now I'm at 12.3%. Now I'm 12.3%, somewhere around 12%, which is what the management was requiring. Now pay attention here. what we did here is that we assessed the position of all our existing clients. Okay. And we understood that $87.3 million is confirmed new business, where I have a contractual new business, where I have a contractual relationship with the client. Okay. And this $54 million that we plugged in as a placeholder is called unidentified new business, which means I don't know where this business is going to come from, but it will come from some client in the pipeline. Okay. And this is the reality of most businesses, especially services business. Okay. They don't have 100% visibility at the start of the year. Now, some businesses, okay, could have unidentified new business as high as 70-80% at the start of the financial year. Think about an architecture firm or think about an interior design firm. They operate from project to project. They don't have retainer fees. In which case, every time they are in a constant pitching mode, right? If they win a new project, then they'll get revenue for next year. So they start building the pipeline even before the start of the next financial year. If they bid now, then that project is likely to start in the next financial year. Okay. So I hope you're able to understand this. Then this is our revenue budget for this department, $141 million. We go and submit it to the board or CEO or whoever, and then get the approval and get uploaded in the system. Okay. With this, I also wanted to introduce you to the concepts of confirmed new business and unidentified new business. Okay. Now, you must be thinking, okay, here there are about 8 clients. So it was easy to kind of do this analysis in 15 minutes and populate the budget in 15 minutes. What happens if there are 800 clients? Okay. The approach is exactly similar. But if we have 800 clients, what I will do is I will probably take my top 25 clients who would be forming 60-70% of my revenue. I would go for a one-on-one discussion with the business unit leader or project manager and all those 25 clients. Okay. For all the other 775 clients, I will send an Excel template and say, hey, basis your contractual relationship, please fill in the revenue numbers for the next financial year or activity for the next financial year, and then use that to populate the revenue numbers for the rest of the financial year. And of course, we will cross question it. We will double check, make sure that all these numbers that are populated are contractually there, are in sync with the contract, are in sync with the new business pipeline. Okay. So I hope this gives you some taste of building a revenue budget in a services company. Here, from an academic standpoint, we did it in 15 minutes, but in real life, this takes at least 2 to 3 weeks, right? It's not easy. Yeah. And you have time, you have big teams, right? Like I had a team of 3 analysts who were looking at only revenue when I was working with an advertising company. All right. So let's get back to our slides. So after looking at the B2B revenue budget example, B2B revenue budget case study, so let's move forward and understand some more elements in FP&A, right? So here is an example of a management reporting slide. I told you that we will do a lot of variance analysis or profitability analysis and then give our management commentary or management reporting pack to the different stakeholders in the company. Okay. So here is one example of one slide, okay, not the entire management reporting pack, but just one slide. Okay. This is revenue bridge, or this is a revenue waterfall chart. Okay. So what this chart type is called as waterfall chart. So what is it showing here? My revenue for 2024 was $35.9 million and my budgeted revenue for 2025 is $55.3 million. Okay. Now, what is the reason for this increase? It can be divided into price variance and volume variance. Okay. Now, price variance, here I can see it's an ice cream company. So cone price, cup price, sandwich price, all of that is showing as a price increase. And here is my cone volume, cup volume, sandwich volume, all of that is showing here. Okay. And you also see a narrative or a title to the slide as well, which kind of sums up the entire chart. Average price increase of 14% across all categories. Volume growth in cone and cup sales offset by volume dip in sandwich. Okay. So here you're bridging the gap. This waterfall chart has come from Excel. And these arrow marks, I have actually manually put it just to make sure, just to increase that effect of highlighting a certain number. Okay. So we cover a detailed budget presentation or building an end-to-end budget, building a budget presentation, and using these kind of charts and graphs and data storytelling techniques to present it to the management in our detailed course, which is the CGFPA program. So we'll talk about it in a while. So I just wanted to give you a quick taste of what one section of the management report looks like, which is a price volume variance, which is an extremely important analysis that most of the product companies or manufacturing companies do it. Okay. Now I have some understanding of today, right? So how do I prepare for the shift from moving from an accounting or an audit kind of a role to an FP&A role? So how do I prepare for that shift? So here are some top tips. Again, not an exhaustive list, but some of the things that you can do to move into FP&A. One is try and leverage your sector experience. Now, let's say, for example, you have accounting or audit experience in insurance sector. Now, try and move to an FP&A role in an insurance company. At least you are familiar with the industry. You understand their terminology. You understand what is a premium, what is a reinsurance premium, what are the risks, what is the claim ratio, all of these things you already understand, right? So try and leverage that sector experience. Find a job through your network, right? More than half of the jobs are unpublished jobs. So try and build a network. It doesn't mean asking people for a job on LinkedIn, right? It goes much beyond that. It's all about building relationships. Go long in terms of building your relationships. Make compliance your bridge. Many times, let's say if you're working in an audit function and you come across a finance manager kind of a role, which is 80% compliance or 80% preparing statutory audit, preparing for statutory financial statements or statutory and all of that. So still take it. At least it will help you transition from audit firm to industry. And then slowly you can pivot yourself to an FP&A role or a commercial kind of a role, right? So make compliance your bridge to move over to the industry side. Power BI and Tableau can be a plus. Again, a word of caution here. These tools are visualization tools, okay? So they are not a substitute for your conceptual understanding. Many people ask me, if I learn Power BI, will I get FP&A role? No, you have to learn FP&A concepts and learn Power BI to get FP&A role, right? So that's how learning Power BI and Tableau can be a little bit more advantageous. Create a reason with a qualification. Let's say today, there are certifications available. There are coaches available. You live in the internet age. 20 years ago, when Asana started, we had absolutely no help. We had no clue what budgeting and forecasting was. And if your senior is in a good mood, he will explain. Otherwise, we'll do our own set of mistakes and learn. Today, you have online resources, you have books, you have LinkedIn articles, you have influencers, you have YouTube videos, you have online courses. Okay. There are so many resources for you to take action if you're serious about shifting to FP&A. Okay. So create a reason with that qualification. And when you acquire a qualification or a certification, that also becomes a talking point on your resume. When you say MBA finance and a certified FP&A professional with 6 years of experience in the areas of blah, 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 right? Imagine chartered accountant and certified FP&A professional having 5 years exposure in the industries like oil and gas, commodity trading, blah, blah, blah. That makes a lot of impact. Okay. Whatever the recruiter is looking for, give them in the very first para. Yeah. Again, how do you prepare for finance roles? What are some of the next steps on preparing for finance roles? I bring you back to this slide where we spoke about 3 different kind of buckets or 3 different kind of categories of finance and accounting roles in large companies, right? So the first 2, okay, is what we'll be focusing on today. In fact, the first one is already taken care by your accounting qualification. It could be your CA, CPA, ACCA, CMA, whatever accounting qualification you have. You have a fair understanding of financial statements, what is internal audit, statutory audit. You already have a fair understanding of all these things. Okay. What is the second bucket is largely experiential in nature. Unless you're building a budget, you don't know what a budget is. Unless you're actually doing some margin analysis, you'll not know what is margin analysis. Okay. None of it is actually taught to us in our accounting qualifications, right? So that is where we at FPI, we have come up with courses and certifications which will help you master this second bucket, right? Focus on these commercial buckets. Second, the FA bucket that we are talking about. Okay. Now, we have spoken to hundreds of CFOs, right? And we have done extensive CFO surveys. And there are 5 critical skill sets that CFOs today are looking for. Okay. Which are these 5 critical skill sets? First is core FP&A concepts: budgeting, forecasting, scenario planning, variance analysis, profitability analysis. All of this is your core FP&A concept, right? Understanding different kind of costs, right? Then comes your financial modeling. Financial modeling, not investment banking related, valuations, leverage buyouts, not that one. Financial modeling is about revenue modeling, scenario planning, that sensitivity analysis. All of that is your financial modeling specific to FP&A, which will help CFO and other business leaders in the company to take certain decisions, right? Then comes data storytelling. You might be great at analysis, but all of these complex analysis, these visuals and your pivot tables will not be understood by business teams. That is where you need to convert this data into a concise story, into a precise story or a narrative, and then tell it to the business management so that the management of the business, so that the management can take certain decisions. Okay, that's what effective storytelling is all about. Business partnering, in collaborating with the business teams, improving your business acumen, trying to go beyond your Excel sheets, trying to go beyond your budgets, helping the business teams to take prudent decisions. That's what business partnering is all about. And then, of course, last but not the least, leveraging the AI and technological developments that are happening in the company so that you can be far more effective and efficient. Okay. So these are the 5 core skill sets that CFOs today are looking for in the finance function. Okay. Here is another survey that we had done. 79%, which means nearly 8 out of 10 CFOs say that it is generally difficult to find the right FP&A talent. And why is that so? Everybody wants experienced FP&A professionals, but there are not just enough experienced FP&A professionals out there. Okay. So that's why building or learning through certifications, learning through coaching programs becomes extremely important today. So what we have done at FPI is to bridge this gap. We have developed our own program. It's called Certified Global FP&A Professional Program, CGFPA program. This CGFPA program is a global FP certification. It is built and delivered by CFOs and FP&A leaders. Okay. And it has 10 comprehensive modules, which we'll talk about it in a second. It has experiential sessions, real life case studies, real life data, real life experiences that the faculty have. We are sharing all the real life like case studies. And then you'll be part of a global alumni network. CGFPA course has been taken by students from more than 25 countries so far. Right? You get personalized sessions with a career coach. You get placement support, your resume review, LinkedIn profile, interview preparations, mock interview prep. All of that support is given here. We now have our own portal. It's called fpnajobs.com, where we're trying to bring all the recruiters and the talent in one place. We're looking for FP&A talent. Right? Access to monthly Q&A sessions where you can directly ask your questions or queries to the faculty. Access external speaker sessions where we bring globally top FP&A experts, tool providers, digital transformation experts. They come to FPI for delivering guest lectures every month. Every month, we try and bring some unique guest so that our students can get continuous benefits and learn from real practitioners in the world. And all of this happens through seamless access of online courses through our LMS material, right? We do live sessions on Zoom. So it's everything which is very easy to access. Now, what does a CGFPA curriculum involve? CGFPA is a live certification program, and the program is for 6 months, okay, where we meet every Saturday live for 2 hours. And I'll tell you more about it. But let's try and understand what is the curriculum of CGFPA program. So on the left, there are 5 modules. I'll let Asif explain the first 5 modules, and then I'll take the modules on the right. Asif?
Yeah, thank you so much, Sawan. So we will talk about starting from introduction to FP&A, where we cover the basics of the including what do you do when you get into a new role, what does the day and a month or a week look like in FP&A, how does I would say life look like in FP&A. So that is the first module. Then we move on to the core modules, which are on budgeting, forecasting, management reporting, and financial modeling. Let me talk about it one by one. So budgeting, forecasting, we cover all the budgeting methods, including your top-down, bottoms-up, incremental, zero-based, activity-based, traditional way of doing the budget or doing the rolling forecast. So we cover all the different methods with examples and case studies. Also, we cover the entire budgeting end-to-end, I would say the entire cycle, right from doing the revenue budget to doing the production to the COGS budget to the SG&A budget to OPEX and CAPEX budget to R&D budget. So we have different examples we have different examples and case studies for each of these, and also an end-to-end case study where you get a view of how does building a budget look like for the entire for one entire organization. And at the end, you do the budget presentation to the CFO. That is what we covered in the budgeting part. And the forecasting, we covered different techniques in forecasting, including your driver-based forecasting, be it judgmental forecasting, forecasting using statistical methods like regression and time series forecasting. So those are some of the forecasting techniques covered, including seasonality, phasing, all of those forecasting terms that are usually used in the FP&A roles. So that is a little bit about the budgeting forecasting module. Then I'll talk about the AI for finance FP&A, which is a very evolving and I would say the most popular module these days, where we cover all of the use cases that you have seen elsewhere in the CDFPA program. So you might have seen 25 different examples, case studies in the CDFPA programs in the other modules. And what we do in that module is we show you exactly the same case studies and examples. How do you do it? How did you do that in Excel when you were doing the other modules? And how you can do that 10 times faster and save time and become more productive using AI tools. Okay, so we cover general purpose AI tools, LLMs like ChatGPT, Perplexity, Claude. And then there are specific agentic AI tools, Manus. Then there are very specific FP&A related AI tools. There are tools which are very specific to very specific tasks. Like there's a tool for doing a forecast or tool for doing a budget. So we cover all of that in the AI for finance and a module. Management reporting is another core module where we cover different topics, including different types of management reports. So different types of management reports usually includes your month and quarter end reports. How do you structure those with examples, case studies? Then there are flash reports, risk and opportunity reports, performance management frameworks like OKRs, KPIs, balance scorecards. So those are some examples of management reports. And then there is variance analysis, which is a separate topic in itself. Then we do profitability analysis, including these and allocations. So that is a little bit about the management reporting module. All of this is done using real life examples, case studies that you can practice and get yourself get the feeling of doing the reports yourself. Then there is the financial modeling module. This is if you've done financial modeling courses from elsewhere were. This will be slightly different because here we are only focusing on the day-to-day use cases. So we use financial modeling techniques and best practices for creating revenue budgets, for creating expense models, for doing scenario planning, sensitivity analysis, cash flow forecasting, capital budgeting for long-term projects. So all the financial modeling best practices techniques we apply, and we understand how do you use that in your day-to-day FA role. We don't cover anything which is not used in the financial modeling for usually in the FP&A roles. So there are other advanced topics which probably might not be covered in this. So that's a little bit about the five modules on the left hand side. I'll take a pause, see if Dawal wants to continue and he wants to show the other five.
Thanks, Asif. So regarding the modules on the right, so no matter what FP&A role you work in, right? So one thing that will be common is that you will be dealing with large chunks of data, whether it is financial data or operational data. So that's where introduction to data analytics comes into play. Here we are covering the basics of Power BI, Power Query, and SQL. We don't claim to make you an expert in these tools, but at least we take you to a level where you are comfortable using them in your day-to-day roles. Then comes financial analysis. Financial analysis, not just ratio analysis or not just any analysis, right? So there is horizontal analysis, there is vertical analysis, there are different types of profitability, margin analysis, mix analysis. All of these things are looked at by the CFO and other senior business leaders in the company to take certain decisions. Then comes storytelling and presentation. Business teams, like I said, don't understand 10,000 lines of Excel sheets. You will have to understand their requirements, build a proper report for them, build a proper dashboard for them or a narrative for them. And dashboard doesn't mean that you fill in every part of your sheet with some button or a chart or a table or something like that, right? So that's not dashboard. That's not storytelling, right? So what are some of the best practices on storytelling and presentations? We look at all of those things with real life examples. Then strategy, as and when you start getting senior in your company, your senior management will start talking a certain strategic language. Okay. At that time, you can't use the term strategy in a very loose way. That's where we cover all the popular strategic tools and also show you how the FP&A team could be interlinked with these strategic tools and how FP&A can play a role in implementing those strategic tools. Right. So that's where the strategy module comes into play. And then comes business partnering. So business partnering is all about two things. One is developing your business acumen. Right? How do you think like a businessman? And then the second part is building relationship with the business teams. Because like I said, you will not be operating in isolation. You will be continuously working with various cross-functional teams. And here in business partnering, we show you good 6 to 7 examples of how we were able to collaborate with HR teams, business development teams, or a CEO or different stakeholders in the company to become a true business partner and unlock some value for the business. Right? So that's what is business partnering module for you. So all in all, 10 solid modules. Don't just think about this as a course or a certification. It is 20 years of Asif and my hard work packed into a 6-month program, right? So that's what the CJ program is for you. Now, what is the eligibility for the CJ program? You need to have a bachelor's degree or a global equivalent in finance, accounting, or business. Or alternatively, you may have any of the professional qualifications like CA, CPA, CMA, ACC, or any equivalent accounting qualification of your respective country. Okay. And we are also CPD UK accredited, and you will be able to claim continuing credits in your accounting qualification as well. Now, how will you get the CGF award? Two conditions. We meet every Saturday live for 2 hours. Okay. For live classes. You need to attend at least 50% of the classes live and then submit a capstone assignment within the stipulated deadline. These two things will make you eligible for the final examination. The final examination is 100 marks, 50 questions, multiple choice type examination. It's a proctored examination, which happens online. Okay. Once you clear the examination with at least 50% passing marks, you will be awarded the CGFP certificate from FP&A Professionals Institute. We are an autonomous body at this point in time. We're not connected with any other accounting bodies in the world. Okay. What is the course fee investment? The ROI of a program like this, I leave it to your imagination. We have had so many success stories in our programs. The course fee investment in this program is $1,795. There is also an option to pay it over 5 installments. The duration will be 6 months. It's a live program, right? And if you miss the live classes, the recording will be provided. But total weekly commitment would be about 3 to 4 hours. So 2 hours will be the live class on Saturday, and about 1 to 1.5 hours of your own time investment is required to do the pre-reading, to do some pre-reading in terms of the materials, the cases that we give, because we don't want to waste time on the basics in the classroom, right? So it'll all be live case study discussion, simulations, practical examples that will be discussed in the class. The next cohort is starting on 10th of January 2026. Admissions for that have now started. Okay. Please make sure that you complete your applications before 30th of November 2025. There's absolutely no application fee. Please feel free to complete the application. Let our team check your eligibility, come back to you with the offer, early bird offer, whatever is going on at that point in time. Make sure that you complete your applications as soon as possible so that you are in the race for cohort 7. Seats have started filling in now. We'll be starting on 10th of January. Asif will be sharing the brochure and the application link in the chat box. Please make sure that you complete your applications, and with completing your applications, if you want, we can also provide you a demo lecture. We can also provide you any connections with our past students so that if you want to understand more about the CGFP program and how it has been beneficial for them in their careers, feel free to reach out to our academic counselors, and then they'll be able to help you with our requirements as well. Okay. Again, there have been tons and tons of success stories. For example, Farhan has been able to move into a role in one of the largest banks in the country. Jihan has implemented a lot of FP&A things that she has learned in the batches. Rohit was able to implement an entire end-to-end budgeting template in his company. So there are many success stories like this of the CGFPA students. Feel free to talk to them as well. Don't just take our word for it, right? And yeah, Asif has shared the application link in the chat box. Feel free to complete the application and let our team reach out to you with the eligibility. Just a quick reminder, the second round of applications is closing on 30th of November 2025. That is end of this month.
Thanks.
Thank you. Bye-bye.